When the Federal Reserve cuts interest rate, it always becomes a headline of the day. Markets react, analysts debate, politicians celebrate or criticize. But for regular people, families, renters, homeowners, anyone paying the bills, there's really only one question. Okay, so when do my payments go down? And here's the honest truth. Even though the Fed just cut rates down to a range of 3.50 to 3.75%, you won't feel much relief yet, if any at all. And it's not because the policy doesn't work. It's because real life moves slower than the news. So let's break this down in plain English. The Fed's benchmark rate influences borrowing across the entire economy. But that doesn't mean your mortgage drops overnight. And doesn't mean your rent goes down. It doesn't mean your credit card APR magically drops. It doesn't mean that your groceries suddenly get cheaper. So those things barely respond at first, and some don't respond at all. So let's start with the credit cards, because that's the bill that hits the hardest. Even with the rate cuts, banks keep APR near 27 to 30% because they price based on risk, not the Fed. So right now, delinquencies are rising, balances are high, and banks are cautious. So this rate cut doesn't light up the payment at all. Mortgages? They move very slow. They follow long-term bonds markets, not the Fed directly. Investors want proof inflation is truly cooling. And right now, inflation is still considered somewhat elevated. So mortgage rate may only move by the tenth of a percent at first. The real opportunity for refinance, that's likely a 2026 story. Auto loans and personal loans may improve sooner, but banks have tightened lending. Even if borrowing becomes cheaper on paper, qualifying becomes very, very hard. Now, here's the part that surprised most people. Insurance, the bill that's crushing households everywhere, does not care about rate cuts at all. Insurance is rising because rebuilding costs are high, labor is expensive, weather losses are massive, and insurers are pulling out of states. So some states already approved increases of 2026. So even if your mortgage eventually drops $40, your insurance might rise $80. Rent is similar. Lower interest rates don't immediately have rent cheaper. Rent follow the insurance, the taxes, maintenance, demand, all still rising. And groceries? Groceries respond to supply chains, energy, labor, weather, not interest rates. So a rate cut doesn't roll back food prices. Now, here's something new that the Fed announced today that almost nobody's talking about. The Fed will begin purchasing about $40 billion in short-term treasury bills over the next 30 days. Some people online are calling it the quantitative easing, but it's not the massive QE programs from 2008 or 2020. This is a smaller, targeted move to keep financial plumbing running smoothly. So think of it like the Fed is adding a cushion under the economy, making sure that the system doesn't jam up at the time when they're cutting the rates and the economic is slowing. You won't feel this directly. It won't lower your bills, but it does help stabilize the system behind the scenes. So again, none of this changes your groceries bill tomorrow, but it prevents things from tightening too fast. Relief comes slowly, and it comes in stages. Savings rates fall first, usually within a few weeks. Borrowing becomes a little cheaper over the next few months. Mortgage rates may edge down by mid-2026. Auto loans improve, prices stop rising as quickly, and if inflation cools and jobs stabilize, the foundation for better 2026 starts to form. But here's the part that matters the most. These rate cuts won't magically make life easier overnight. It won't lower rent next month. It won't cut your insurance bill. It won't drop your credit card interest. And it won't undo years of rising costs. But it does help prevent things from getting worse. It slows the pressure, it steadies the systems, and sometimes, for a lot of families, stability matters just as much as relief. Numbers move slowly, but real life doesn't wait, and your wallet deserves clarity. So I'll keep tracking every change, the rate cuts, the bond purchases, the inflation data, and I'll bring it to you in plain English so you always know what's coming next. Thank you for watching.